I'm going to explain about the journal entry for credit purchase and cash purchase of goods. So I will be covering some topics like goods purchased on cash or by check, and how to prepare the journal entry for the purchase of goods on account, it means on credit, and entry when the payment is made to the suppliers of goods, and what will be the effect of cash purchase and credit purchase on financial statements. So one by one we will be going to discuss with the help of some examples. Now the first example is in front of you. Before going through with the example, I would like to explain what is the meaning of goods. All commodities or items which are purchased by the business for selling is known as goods. On February 6, purchase goods from a Best Buy company, $9,500, and the full payment is made by check. So in these transactions, there are three elements. The first one is purchase, second one is Best Buy, and third one is check. Right? So check mean bank. So in this example, that we consider the name of the bank is the Scotia Bank. So from all these three, the two element that will come under the journal entry. We have purchased goods on cash. It means the payment is made by check. So whenever the payment is immediately made, the name of the company, name of the organization, and name of the person will not be considered in the journal entry. So in this case, we will write a purchase account debit to Scotiabank 9500. Purchase is the nominal account and Scotiabank is a personal account. And rule for the nominal account is debit all expenses and losses, credit all income and gain. So this is the expenditure of the company, and we will debit when the expenditure of the company increases. And on the other side, the bank value has gone down. It means the value in the dollars in the bank account has declined by $9,500. Scotiabank is the personal account. The rule for the personal account is debit the receiver and credit the giver. And this is also current assets in nature. What will be the effect of this journal entry on profit and loss account and balance sheet? I'm just going to explain now. Look at this. Purchase is expenditure, so that's why the purchase will put on the debit side of the profit and loss account, and the Scotia Bank is the current assets, and that will falls under the asset side of the balance sheet. In the next example, that I'm just going to explain how to make a journal entry when the purchase of goods are made on cash basis. So in this example, on February 7, purchase goods from Samsung company, $1,500 value, and the full payment is made by cash. In the previous example, the payment was made by check, but now the payment is made by cash. So in these transactions, again there are three elements. One is purchase, second is Samsung company, and third one is cash. As we know, the Samsung company name will not come at the time when we make some transaction or journal entry. So purchase account debit to cash. Purchase is expenditure that will come on the debit side like 1500, and cash has gone down from our company, means reduced. So once the cash is decreased, means assets are decreasing, we will credit it. So that's why that we have done it. Cash falls under the real account as per the golden rule of accounting. Debit what comes in and credit what goes out. So in this case, the money is going out from the company. So that we have put on the credit side, and the credit what goes out. This is the rule. Now, what will be the effect on the profit and loss account and balance sheet? The purchase will come on the debit side of the profit and loss account under expenditure, and the cash will fall under the current assets, so that will be shown on the asset side of the balance sheet. Now, the next example is related to when goods are purchased on credit. So, in this example, purchase goods from Best Buy $70,000 value on account. Account mean on credit. It means there is no any sign of cash or payment by check. In this case, the name is relevant. we want to put the name in our books of accounts so that in future that we should know how much payment is due to other parties, to the creditors of the companies. Now, purchase account debit to Best Buy. This will be the transactions. This will be the journal entry on the basis of the transaction. So, Best Buy is the name of the company from whom that we have bought some goods of $70,000. And it is clear from the name itself, this is the personal account. And a golden rule of accounting says that debit the receiver and credit the giver. So, in this case, this has become the current liability because that we have purchased goods on credit, and in later on maybe after a couple of days or a week or a month, right, but within 1 year we will make payment to these parties or suppliers. Now I'm just going to explain the effect on the profit and loss account and balance sheet. To purchase, that will come from the debit side of the profit and loss account, and the Best Buy, that will come from the liability side, right? Because the Best Buy is our creditors. We will pay money to them because we have bought goods on credit basis. At that time, we did not pay any dollar. Now, the next example is on February 20th. Payment is made. So, payment is made by check, $33,000 to the Best Buy, which that we are referring to the transaction number 15. It means the previous transaction. So, the journal entry for this will be Best Buy account debit to Scotiabank. So Best Buy is what? The Best Buy is the company who is receiving the money. We know this is a personal account, debit the receiver, and this is also the current liability. So current liability is decreasing. When the liabilities are decreasing, we will debit it, otherwise credit it. And the Scotia Bank, that the bank balance has decreased by $33,000. And Scotia Bank is also a personal account, so credit the giver. So this is the current assets. What will be the effect of this journal entry on the profit and loss account and balance sheet, which is in front of you? On the profit and loss account, there will be no any effect, but on the balance sheet, there will be effect on the asset side as well as on the liability side with the same amount. Under the asset side, the Scotia Bank, that will comes under the current assets, and the Best Buy, that will comes under the current liability under the liability. From this lecture, we have learned that when goods are purchased and payment is made immediately, then supplier name is irrelevant and will not be considered. But on the other side, when goods are purchased on credit, then the name of supplier will be taken while making journal entry and considered as current liability. So, what is the meaning of current? So, current means within 1 year. Any obligation you must settle within 1 year is known as current liability. In this example, the Best Buy is our creditors, which is also known as accounts payable.